Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Alex Coffey, Senior Market Strategist at Charles Schwab, to discuss the January reading of the Schwab Trading Activity Index, known as STAX. It's a proprietary behavior-based index that analyzes retail investor stock positions and trading activity, so we can get a sense of where and how much exposed retail investors were. Alex, it's great to see you as always. Welcome back to Trade Talks. And we saw an uptick in the STAX for January.
We did, yeah, modest, but an uptick nonetheless, just under of a 0.4% climb as the market, of course, made new all-time highs in January. Not the same for STAX. We saw those, of course, back in sort of the retroactive data that we calculated for this going back to 2021. But we are still seeing investors slowly but surely increase exposure to the market as it sort of climbs this wall of worry on better than expected economic data in hopes of easier monetary policy going forward. Notably, though, it has sort of leveled off. So as the market was up, if you look at something like the S&P 500, up like 2.5% during this STAX aggregating period for the month of January, we only saw an increase in the overall exposure as measured by STAX by about 0.4%. So they're still moving in the same direction, but they're diverging in terms of the pace.
Yeah. Well, I mean, Alex, it's no surprise. You have to start to question yourself at some point when you start to see the indexes hit, most of the indexes hit all-time highs, consecutively. Mm-hmm. Is it now the time to put money into the market? And of course, it depends on your time frame and so forth. But where did you see buying and selling activity among Schwab retail traders?
Yeah, and this is, I think, also makes it interesting too, is it's really been a more stock pickers market. We've seen such concentration in the names that have outperformed, and some of those names are amongst the buys. You see Amazon, you see NVIDIA. Of course, Tesla over the years has been a more reliable name for investors, but has struggled recently. So investors seeing opportunity maybe to buy into some of that weakness in a name like Tesla, but following the trend in a name like NVIDIA, as well as Amazon, as those names continue to surge. But notably, I saw in the sells Walmart getting sold near all-time highs. I thought was interesting. That's sort of a name that's been slow but steady for many. And then General Motors, a name that was being sold. So while electric vehicles have lost some of the hype and excitement of the last few years, investors looking for opportunity in a name like Tesla, but kind of running out of patience for a name like General Motors.
Yeah, it's interesting. And of course, we're in the thick of earnings season. Last week, of course, we saw 5 of the 7 MAGA names report. And, it was kind of a mixed bag there. But it seems as if, Alex, that the market overall, whether you're looking at equities or bonds, it's still really hyper-focused on what's happening with the Fed, interest rates, inflation. Even when you hear about the heightened geopolitical issues, they've largely shrugged it off. It's not as if you've seen one extreme move to the other unless it's related to a Fed or inflation headline.
Yeah, it's actually been really interesting. I oftentimes will look at kind of the strength of the U.S. dollar and that's impact. And while I think many sort of the first thought is lower rates is typically better for equities, weirdly, because it's so largely impactful on things like small caps and these companies that are trying to move towards profitability, it's almost like as the Fed's got more hawkish, as the dollar's picked up strength, that's only been more fuel to this Magnificent Seven rally, particularly names like NVIDIA and Microsoft that have this growth story behind them, because they're somewhat all-weather right now. They can withstand maybe, stronger monetary policy for longer, but you don't really have anywhere else to go at the moment. So it's almost as if we move things lower in interest rates, it opens up the idea, playbook a little bit more. There's more names to choose from, and those are the only days that we even see modest underperformance in names like NVIDIA. I mean, look at a day like today, kind of a short-lived pullback for NVIDIA, already cutting its losses in half.
Yeah. All right, Alex, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.